Hello, my name is Matthew Kidman and welcome to the latest episode of Success and More Interesting Stuff, brought to you by Livewire Markets. Nick Scali Furniture is probably best known for its TV ads that feature songs from 70s and 80s artists such as Madonna, Steve Winwood, Cyndi Lauper and Joe Cocker. Behind the feel-good ads though is a furniture powerhouse. Since listing on the Australian share market in May 2004, the company's sales have increased 1,068%, net profit by 1,407%, and the dividend is up 1,263%. During the same period, the number of stores in the company has risen from 10 to 107. This has all been achieved without having to tap investors for more capital. Even when the company swooped on the troubled Plush furniture chain in 2021, it didn't bother shareholders, instead using its own cash reserves and some debt. 2 years on, that debt is effectively back to net zero. All this has added up to a share price increasing just over 1,000% in 19 years, 10 times greater than the performance of the All Ordinaries Index. The driving force behind the success has been Anthony Scali, son of founder Nick. Anthony was the CEO when the company listed in 2004 and remains at the helm today. Not much known about Anthony. He conducts his investor briefings in a polite manner, but they are always brief. His presentation decks are also concise without too many metrics. There is little fuss and the message is always simple. More stores with decent margins will deliver returns for himself and the other shareholders. The success of the business has ensured Anthony does not have to worry about personal finances, but ambition still burns. He thinks there is plenty of runway left in Australia and New Zealand for the business. And maybe, just maybe, he can apply his retailing magic to the bigger market of the United Kingdom. Welcome, Anthony. Now, those songs in your ads, are they off your playlist from 40 or 50 years ago?
Well, depends how much we have to pay for them is the answer to that.
But do you
think there's a group of us that, yeah.
And they're pretty effective.
Yeah, I think they've got to have a wide age demographic is what we look for. Make sure that they appeal to, 20-year-old and a 60-year-old like myself, so yeah.
And does the 20-year-olds like it?
Yeah.
Oh, they do?
Well, because I've got children, so I always ask them, do you know this song? Do you know this song? Back from the 90s, and they know it. It's amazing how young people know the old songs. So it's, yeah.
Well, I'll assume you chair that committee that selects it, so you've got a bit of influence.
Yeah.
But looking at those numbers that I read out in the introduction there, the market hasn't been too kind to you, has it? It normally when you've performed over, 19 and a half years, and you deliver that kind of performance, you get multiple expansion. But when I look at it, the multiple that you floated on all those years ago, it's not much different to the multiple of earnings today.
Yes. Well, that's right. We probably, when we floated, I think we listed on 9 times earnings.
Yep.
But within the day after we listed it, it went up. It reached as high as 20 times at certain, within a year. So I guess as the business, look, our growth has been good and steady, but it hasn't been spectacular. I think that's because we're a bit careful about that. We just didn't expand a lot of stores in a short time because we were always concerned about not doing it too fast, which would cause issues in growth, particularly on the distribution side of furniture business. And also we didn't want to be locked into long leases at very high rents, which do too many of those, they'll come back to bite you. So, because, the key is to make money. I mean, at the end of the day, I'm not a revenue person. I'm a revenue, but I need to make money. No point being a busy fool.
Yeah, but I would say that one of the things that the market looks for and would tell you, all the investors would say we like consistent, steady growth. And that's what you deliver. Do you think there's a little bit of hesitancy around the fact you're a retailer and people say, well, how many more leather lounges can Australians buy? And does the housing boom go on forever? Do you think there's a little bit of a stigma attached to it around investors?
Yeah, maybe. But, the Australian population's grown a lot since we've listed, and that's allowed us to open more stores, more than we thought we could ever open. And so that sort of underwrote the sales performance and, how many sofas can people buy. And also I think the other thing people are lost sight at is that people replace their furniture more often than they used to. You know, going back to maybe our parents who kept the dining for 20 years and the lounge a lot longer. It's a bit more fashion orientated, colours changed. I think people refurbish homes more often now.
We definitely spend more money in the home.
Yes, and I think, you know, and there's been all those TV shows. So I think that's helped our business along the way.
Well, let's go back. And I think the business now is 61 years old.
Yes.
We've only seen it in the last 19 years, but it started all the way back in 1962 with your dad.
Yes.
It'd be interesting to work out how he got started and why furniture.
Yeah, well, my dad immigrated from Italy, I think 55.
How old was he then?
18. But he was so very ambitious, you know, came here with not a lot of money, very little.
Which part of Italy was he?
He's from the south, which is the poorest part. He's from Calabria, which is even, you know. And he said to me in those days there was no job opportunities in Italy and people either went to the US, Canada, Australia or Argentina if you wanted opportunity. So that's what he did. And within 5 years, he had his own business, a small selling appliances in North Melbourne. He had a partner who was an English guy.
So he came to Melbourne.
Went to Melbourne. I was actually born in Melbourne. But he always wanted to come back to Sydney. So while selling then TVs, you know, TVs was the big thing. He started selling TVs, but they needed to sell the TV cabinet with the TV. And he realised he's making more money on the cabinet than he was on the TV, which is still today true. And so he went into the furniture business, opened a store in Brunswick in Melbourne, just furniture, and then came to Sydney, sold his business in Melbourne to his manager, gave him terms to pay it off, and then he came to Sydney and opened up in Ashfield on the Hume Highway in 1962.
So how does an immigrant like that, who I presume comes with very little, get into a retail business where you've got to have suppliers,
yes,
you've got to have terms, you've got to be able to pay the rent? How did he give you any insights on how he went about getting established? Because as you know, all those things are critical to small business as well as big business.
Well, and also he's a clever guy, and you know he had to educate himself. You know, he wasn't taught what a balance sheet looks like, but you know when I started into the business, he was way across it all. You know, and he certainly what he instilled in me, the disciplines of running a business, I still use today, and he always had a good psychology with people. He sort of had a good intuition on people. But anyway, why did he do it? Well, he fell into retail and he liked it. And then he saw an opportunity in furniture to sell to a lot of the migrants, particularly Italians those days, who wanted, you know, so he opened a store with the name Nick Scali in an area, Ashfield, which is near where a lot of the Italians immigrated, lived in, Haberfield.
The inner west of Sydney?
Yeah, that's correct. And it was very niche. And in those days, traditional furniture is what the immigrants liked, you know, that very Baroque. And that's so he found a niche, one store operation. He did pretty well out of that.
And you just mentioned then the foundations of his business or his philosophies.
Yes.
Can you remember any of them in detail?
Well, one was that doesn't matter how clever you are, you got to work hard.
Right.
You know, he instilled that into me from the beginning, and what I learned along the way is the expectations of not being into the detail. You know,
yep.
Watching every part of the business. Don't neglect areas of the business. So in a furniture business, for example, yes, you've got the retail stores, but the distribution's not easy because furniture's a big item. It's got to be, you know, delivered in a truck to people, into stores, and these days the importing. So supply chain's always important, and having good. One thing I learnt from him was drivers were critical for your business, because a bad driver, a delivery driver, if he doesn't deliver the furniture and he damages it, it'll come back and you'll lose the sale.
And you lose your margin straight away.
Yeah, that's exactly right. And if you look around the world, the bad furniture business all have that problem, is returns. So returns was always about minimising returns, being very careful in that bit of it, the part of the furniture business.
And what about cash collection?
Yeah, and you have to...
Because there was a lot of terms in those days, like in buyer terms, generally in retail.
More, he told me, more because in the 60s, I was only 6 or 7 years old, those days, terms were really important. So he used to use a company called Mercantile Credits, who used to do the consumer finance. But as, by the time I came into the business, it wasn't that critical anymore. It turned more to a cash. And even today, our business, funny enough, finance is a really small part of our business compared to, say, the likes of Harvey Norman.
Yeah. And that's something I've noticed over the years. You haven't promoted that finance as much as you've got older. Yes. It used to be part of those ads.
Yes, correct.
If you go back to the early 2000s, it was about finance.
Yeah, correct.
Then you switched on the music.
Yeah, correct.
And changed the tone.
Yes, yeah, correct.
So your dad got started and he met your mum in Australia.
In Australia. She was from Holland. She was Dutch. So, yeah.
Another immigrant, though.
Yeah, she had an immigrant. She came here on a working holiday. She told me she got sold on it, that it was going to be great. And then she ended up picking cherries on a farm, in the Australian sun in the outback. Because those days the immigrants had to work in farms. You had to be able to stay here for a while, like they do now, I think, actually, yeah. So that's what happened.
And how did they meet?
They met, I think, in a pub in Robinvale, Mildura.
Right.
Yeah, Mildura, yeah. And the rest was history.
Well, a lot of Italians moved down that way and still live there and made good livings. It's a prosperous town.
It is, yes, it is. Yeah.
So that was fortuitous. So you've mentioned a little bit. It sounds like when you were young, when you were a kid, in the household there was a lot of business talk?
Yeah, later on, I think. Yeah, my dad he always told me how he was going, what he was doing, and he did that. And then particularly when I did BCom at New South Wales Uni, and I said to my dad, look, I'm not going to come in the furniture business. I'm going to become a merchant banker, which is now investment banker, but that was the terminology those days. And he said, yeah, that's okay, but you've got too much time on your hand at uni, so I've got work for you to do in the business. I said, okay. So, and that's what happened. I started working in business and I never left it. Never worked anywhere else.
Never became that merchant banker.
No.
That's probably a good thing. And what was before we go to university? What were you like at school, and what did you like to do as a kid?
I was an okay student. I just scraped into university. I liked business, but I didn't like science. I didn't. I was bored quite often at school. To be honest with you, geography and science, those things. I was okay. I was better at maths. I loved commerce when we started taking that as a subject. So yeah, and I got through uni. But I wouldn't say I was the most diligent student. I was always probably sailing. I sail a lot, love sailing. So, I was sailing a lot while at uni, but then my dad made me work hard. And I was actually, towards the end of my uni years, I was really working hard in the business, long hours, So I like commerce, like business.
And were you growing up in the inner west? Is that where you were located?
No, my parents, originally we lived in Lillypilly in the Southern Shire.
Yep.
And I was about 10, we moved to the eastern suburbs because my mother was very much about education and she wanted us to go to a private school. So that's what happened. We moved to the east.
Right. And still there today, I think.
Yes, correct.
That's home base. Your dad opened a second shop at some stage?
Yeah, he opened a store. He had a store in Wollongong for about a couple of years, then closed it. He struggled a little bit with opening more stores, I think, because there's some open. We had one in Surfers Paradise those days, and then he closed it. And I think the reason they didn't succeed is because we're in that niche market. The company was in that niche, very traditional furniture, wasn't mainstream enough. And then also he was a bit of an entrepreneur. He had a wine business. He did property development. So he was doing divesting, and I suppose then we went through the 90s where interest rates hit 19%, and we got caught with property developments and subdivisions, and it was really tough because the small furniture business cash flow was funding it. So I learnt a lot from that period, and then after that, he and I said no more property. We're going to expand the furniture business, and we're going to change what it looks like. We're going to go a bit more mainstream to widen the segment we were appealing to. We become wider, and then we started opening stores, and that was a change.
You talked about lessons in the early 90s. Property was one of them.
Yeah.
I know more recently you've been a property buyer, so maybe you've gone the full circle. But just on that, Nick Scali, the company that we've seen as a listed company in the last 90, has never been geared to any extent. You had brief moments when you bought Plush, but you seem to pay that down pretty quick. Is that the ghost of the early 90s ringing your ears?
You're spot on, Matthew. So I can remember in the 91, the bank, because the bank is saying to us, we can't give you any more money. Your property values that you hold are now worth half. I remember the State Bank, they changed their policy from external valuers to internal valuers, and they came back to us and said, well, our internal values tell us your property's half. So you're in trouble. How are you going to top up? And then interest rates were 18, 19%. And so every bit of money we made was just going to pay interest. And it was very, very stressful. It actually choked the business for a while. It was really difficult. So, that lesson, because of that, yes, you're right, I've become very conservative on the debt side. I have no personal debt at all. Even the things I do, so maybe it's too much to an extreme, but the company has debt, and it has it on property. I like debt on property because 50% geared is okay, you can handle that.
But you've also got a cash balance against that.
Yeah, and you've got a good cash flow, great.
I always think, being a small company investor, the best companies are the ones that have got cash on the balance sheet, net, because then the history is that it's been very profitable. Correct. Because a lot of small companies come to the market, they're more conceptual rather than operational.
That's right.
Just on university, it sounded like university migrated into full-time work at the family business. But did you learn much from university? Was that a good period? Because a lot of people say that university is not that relevant to the real world. But
no, I majored in accounting and finance, and that certainly helped me and probably helped the business in that sense. So
because your dad would have had to have learnt all the finance on the job, I gather.
Correct, yes. Those days you learned it through your accountants or auditors, So, yes, he was self-taught, but he was... So, university was valuable. And I think my children, two of them, did commerce, and both, I said, and whatever you do accounting and finance, because it sets you up for the rest of your life, if you manage your own money.
I said the same thing to my son, and he said, are you joking? So
really? Yeah.
You've obviously got more influence.
Yeah.
Anyway, he might get there one day. So you then went straight out of uni into full-time business. You went through the early 90s. That was tough. But by the time you listed in 2004, on the numbers that I can remember and looked up, you had 10 stores. So that pivot away from property into investing into stores did lead to a chain.
Correct.
And those stores, from an investor's point of view, there were other retailers at the time when you would add up profit per store, and you'd look at it and they'd make $20,000 a store, and you'd say, well, why would you roll out another one when that's all it makes? Because they're difficult to run.
Yes.
But yours were incredibly profitable.
Correct.
In the hundreds of thousands, if not more.
Yes.
But how did you get your dad to go from that one or two stores to I think you had 10, correct me if I'm wrong.
Yeah, no, you're right. We did have when we listed, but we were very profitable. I think at that point, what happened, furniture was being shifted out of Italy into China. But
before that, though, you sourced your furniture out of Italy?
Correct.
And was it helpful to be an Italian family or an Italian dad?
To an extent, but the Italians, they're they were less flexible than the Asians. So that, it's hard to explain, but the Italian factories, you might go there and they say, oh, we make this table that's 180 centimetres long. We go, no, we need it 220 by 100 wide, because that's what Australia wants. They go, oh, no, that's impossible. We can't do that. But we didn't have the volume those days at the same time. But China, we went to China even when we started buying with 6 stores. They were flexible those days.
So that would have been the late 90s?
Early 2000. Yeah, late 90s, early 2000. It was early days, and we were able to make better margins out of Asia those days, and still today. And they're very good manufacturers. So, yeah, that helped our business, to be honest with you.
At that time, your dad was on the board when you listed, but you were CEO. When did that baton get handed over?
Yeah, that was a gradual handing over, but officially it didn't happen until we listed. But I was really, in effect, running the business. My dad was a bit more presidential, if you like. Still had the title of CEO. So it was progressively handed over is probably the right answer, and then officially was when we listed.
And why would you list? It's a family-named company, family-run company. Your dad's obviously done well as a private business person. That must have been difficult because all of a sudden you've got different masters. You've got shareholders, you've got the ASX to deal with, you've got compliance that probably never existed prior to that. What was the impetus to...
Conservatism again, because the issue was to open more stores, you were putting more at risk personally. And, quite often those days, new leases, they wanted personal guarantees or long bank guarantees. And it was like a consolidation a little bit. But we took money off the table for the family, so that consolidated our position. Because you got to remember, we went through the 90s where we were nearly, bankrupt almost. We just held on. We really just held on. Properties at half. So it was like a consolidation of where we're at. We kept 50%. And that gave us more confidence, less risk to start opening more stores. Because when you're running a 10-store business, a lot different to, say, 100. You're much more involved. Every store salesperson, manager, the stores are run better. They are, I admit to that. You can't run 100 stores as well as you run 10. You just can't. So there's more risk in opening more stores and more growth pains. And so we thought, okay, if we do fail, at least we've got some money we've taken off the table. It just gave us a little bit more ease to expand. But having said that, we ran it, or in preparation for that, we'd run it very with a lot of discipline. So we just flowed into a public company very easily.
So that transition wasn't hard. And was it hard for your dad to make that mental leap?
No, he was for it. He was actually the one. His ambition was always to list one day. He wanted to list. Right.
So he followed the share market.
He did, and he just, I think it was like an achievement for him that he could have a business that listed. And so we did.
And that's where you prospered. I grew up in the Riverina with a lot of Italian families.
Yes.
And property was the only thing. You mentioned the share market.
Yeah, yes.
Like you look at you as if you've got two
and maybe
heads.
They're right?
So he went the other way.
Yeah, he did. At that point, yes.
And your brother and sister, both in the business at that stage.
Yes.
And were working in it. But later they left and they sold their shares.
Yeah, look, what actually happened, my sister left earlier, almost prior to listing, because she had a family, and my younger brother, he's 10 years younger than me, he worked in the business right up until end of 2015. Mm-hmm. And I think the reason we then split the business is because their interest was more about doing other things. I was happy to continue the business, so...
And you bought some of their shares?
Yes.
At the time. Was that seamless, or given it's a family business, was there any Was that tough at the time?
Yeah, it was tough because, you know, there's always, everyone's got a different opinion to value. But it was the right thing to do at the time, I think.
And that's worked its way through, and everyone's happy with where they're at today.
Yeah, they are. I think they're happy. They're happy. It was difficult for my father, of course. You know, he loves family, and and it's difficult for him because he was in the middle. So I was more the driven one about business. I liked the business. So, and at that point, my daughter, because she did commerce, she came into business when she was 18. She's still in the business now. She plays a key role in the product side. So it felt more like it was the right time to do that.
So it's still a family business?
It is. I think it is. I think that people feel that.
Have you got two of your kids in the business now?
Yeah. My youngest son only joined 3 months ago.
Right.
He did BCom at New South. He worked at Telstra in Big Data, then started his own online natural wine business, then sold that. So I said to him, look, I'm getting old, I need help. And our e-commerce is a big area, and it's actually difficult to get people in that area. And so he fitted the bill, and I talked to the board, and they were happy with that.
So let's go back to when you listed May 2004. I think it was $1 issue, and as you mentioned, it was up on day one.
Yes.
And people have bought into that. But the idea with Australian retail concepts, and that was pretty well pre-online then, was that you needed a rollout, you needed a growth channel. And I remember at the time you used to say, well, we've got to be cautious, we've got to sign the right leases, we don't want to go it's incremental, we'll do this. But that's what you were saying outwardly. Internally, you and your dad and your brother and sister, or your brother, what were you thinking? That there was room for 100 Nick Scali stores if we got it right in ANZ?
Well, back then we certainly thought there's going to be room for 50 stores, Nick Scali stores, and as I said before, population growth allowed you to open more stores. And we always were ambitious about our store growth. And we also knew, volume helps a business. You get the economies of scale, and buying and distribution and advertising, and that turned out to be true. And I think that was the main focus for us, is to grow the network so we could get those economies of scale and buying power, and even landlords, it helps today. A Nick Scali store gets a good deal. Because
your gross margins, which you talk about a lot in your presentations, that's the one metric that have held in. They've been strong for a long time. I know they've floated around a little bit, but generally they've stayed up there. Is that a metric that you follow very closely?
Yes.
Because you tell us about it.
Well, and at the end of the day, to get a good margin, you've got to buy well. It's not about just setting my price. I've got to be the best at buying the best value we can. And I think we're good at that. I think we've been doing it a long time. We understand furniture, and hence that's the direction I wanted my daughter to come into the business, because it's like a chef. If you lose the chef in a good restaurant, you're in trouble. And so luckily she's very commercial, because it's okay to be creative, but you need to be commercial, right? It's got to sell. You got to know your customer. You got to know your market, and you've got to know value when you see it, and you got to work with the factories closely to get that. And we spend a lot of time doing it. I still travel to factories. We've got good relationships with it, and so we've got to. So
those early relationships that you struck up in Asia have paid dividends over the years, because you deliver more and more volume
to them. Correct, and they will look after you when you give them volume, and it's a mix. That they'll lose a bit on one product, gain a bit on another. So you got to let them live too. So it's a balancing act there.
So you're giving us, you've got to buy well, you've got to have good drivers.
Yes,
you've got to be commercial, and I have heard you say on another interview that you've got to have good salespeople, and they're not easy to find.
Correct.
So just elaborate a bit on that. How do you find them, and why are they so important?
They're critical because, we're selling a high-ticket item, and our average unit sale has risen and risen, and, the average lounge sale is about 3,500 today. And, that's, for most people, that's not a small amount of money. So you've got to sell that. We can't just be...
That's in your top 5 purchases, isn't it? Home, car, kitchen.
Correct.
Furniture.
And it's a lot of competition as well. There's too many furniture retailers. There are so many, little ones, big ones, chains. So we're competing with a lot of other furniture retailers. So our salespeople have got to be better. Now, not saying we always achieve that, but we strive a lot to have good salespeople in our stores, and it's challenging. And the other problem is, 70% of our business weekends. So your good salespeople have got to be there weekends. And that's tough.
So one of your long-term and great competitors, Jerry Harvey,
Yeah.
at Harvey Norman, I remember saying that when you ask him what his main job is, he'll say picking stars.
Yes.
He's obviously got the franchise network, slightly different, but picking stars, people who can sell. So
yes.
He thinks the same thing, but where do you find them?
Everywhere. You've got to find them. From
word of
competitors sometimes. It's going to market, doing store visits around poaching, advertising, whatever. There's all different ways of doing it. So there's no one way, and referral sometimes. And he's right. He understands that exactly because my dad did door-to-door selling. So did, I think, Jerry Harvey.
Correct.
So they learnt the importance of having good salespeople, the old school, the old way of doing it. And it's still important today, no matter, even a car. You'll buy a car from the guy you like. Not, the BMWs, you might be able to buy that at 10 different, locations. You'll buy from the guy you like, I think. So it's really important in our business, the same thing. They've got to like the salesman first. They've got to trust you. They trust the brand. I mean, our brand's already done half the job. So it's then left to the salesperson.
Definitely, isn't it, in Australia, a salesperson have got to be trusted. It's not the hard sell the Americans are used to.
No.
If you trust me, you're a chance of buying off me.
Correct.
So when you're hiring these people, because you've got a big network now, you've got a lot of salespeople out there.
Yes.
You said you've got to be across all parts of the business. Do you still interview those people?
No, I don't interview them,
how do you do that?
but we meet every week. I meet with my head of retail and a few of the regional managers. I meet and we review the past week on what store didn't perform. Not the ones that did. We're happy with the ones. It's the ones that didn't perform. What's going wrong, and then normally it's a people problem. Something's happened. You might have lost your best salesperson in that store, so that's constantly onto it, and then we've got to recruit. Unfortunately, if you're not selling furniture, you won't earn commission, and you're not going to stay because you won't sacrifice your weekends not to earn commission, right? So it's self-fulfilling.
That's another point you've made before. They've got to be able to work weekends.
Correct.
Which is not standard.
It's hard.
Especially if you've got families.
Yeah, exactly. So we do roster weekends off, but it's difficult when your good salespeople are not there. In any store, as Jerry Harvey once said, I remember listening to him at the Chamber of Commerce one day, he said, you only need one gun in every store and your sales will improve a lot. And he's right. So if you lose that gun, that store performance will drop. And at our margin, losing sales really hurts.
Well, it's interesting. Jerry it can be quite disparaging of some of his competitors, but over the years I've heard him speak. He's always been quite a bit of a admiration for the Nick Scali brand. I think maybe because you operate on a similar kind of philosophy of how things work in the world.
Yeah, and I think we're obviously, I've got a lot of admiration for Jerry Harvey and Katie Page, both of them, because they've done unbelievable. What they've done is fantastic. What they've built, even looking at their property, it's massive. Very undervalued business, really. Yeah, exactly. And I think, he's an ethical person. He believes in hard work. Very similar to ourselves.
And in the Scali family, you mentioned your dad did door-to-door selling.
Yes.
Was he the salesman and you were the operator, or are you a salesman?
No, he's a salesman. He's a very good salesman, and he's got charisma, which I don't have, I think. I'm more the Dutch side, a little bit hard-nosed, a bit more into the numbers but I can sell if I have to sell, I guess. But, I don't over-promise. I'm not – I think you know that. I'm not a CEO that is trying to talk it up. A bad result's a bad result, and what we did wrong, we've got to admit to it. If you didn't do it well, if we didn't get our marketing right, or we got the product wrong, that's our fault. We've got to admit to it. I think honesty, and I think we always try to be honest about good or bad results.
Before we delve in a little bit further about what type of CEO you are, I'm interested in that. It is a competitive market. Most entrepreneurs who start a business, the less they know, the better, because it's hard to start a business and get it running. What made you think that you did have a niche, that you could be a big player in the Australian, New Zealand furniture market when it was competitive and still is?
I guess I didn't think like that. I just thought I looked at it was more about focusing on our business. What could we carve out for ourselves in a nation? And we looked at competitors, but I don't look at them that closely. I don't follow everything they do, the way they do it. As it's more about working it out yourself, I think, is really important, doing it your way. We are different. If you walk into our business, it's a lot different than other furniture businesses.
A lot of people listening to the podcast would have been into a Nick Scali store, but where do you sit in the hierarchy in terms of expensive down to cheap?
Well,
who do you cater for? You said you got a broad age span that comes in.
Yeah, the perception of Nick Scali is that we're more premium than we actually are.
And you're happy with that?
Yeah, I think people, when they come into the store, are surprised at the value we offer. So there's an advantage to that and a disadvantage, because there's many people who don't come into our store because they think, oh no, they'll be too expensive for me, when they're not. But we are very competitive. Once you're looking for furniture, I think if you come into our store, I think we've got a good chance of closing you, because people will be surprised at the value, and also they know already we're quality. So, and we spend a lot of time making sure that the manufacturers build a lounge to our standard, because the customer raises the bar on us as well. They expect a better standard, so it's really important we deliver that. And that we don't always do that. No, we fail at times, because a lounge is handmade after all. So
it's amazing how important expectations are.
Yes,
you come in to a store thinking, well, this is going to be out of my range.
But it's
and
not.
Then you realise that, no, I can make this work.
Yes.
That's a good thing. That's a good selling technique.
Yes, exactly.
Never overpromise.
Yeah.
Okay, so you've mentioned in the conversation we've had different aspects to how you think about the business and how you go about the business. But just on you yourself as a manager, as I said, you've been there since the day it listed. You've been the face of the company. It's got a lot bigger, a lot harder to manage, I imagine. What kind of manager are you? It strikes me as you know all about the business. You don't manage it from necessarily just from head office.
No, correct. And I don't think a good retailer should do that. Because I'm passionate. I think the first thing, I've got passion. So, and my advantage and how I became a CEO, what type of CEO, is from coming from when it was a very small business to where it is now. So I think I understand every part of the business. So I can see something going wrong. I can pick up when something's going wrong pretty quickly, whether it's distribution, product, or even marketing, right? So, I think a good CEO should be across the detail. And I am very detailed, but probably sometimes too passionate. Probably my expectations sometimes are too high from people. I expect too much. And that can come through,
And the people who are in the business, can they run with you? Or has there been turnover over the years because, as you said, sometimes you are demanding? Yeah, look,
so my head of retail is 18 years. My head of distribution is 20 years. Obviously, my daughter's in the business. She's been in there now. It's 14 years. So there's a lot of senior management. that have stayed, and they're very critical roles, and they understand when I'm over passionate. They get that, they know that. I think they know me because I might be over passionate, but they know I'm going to look after them if they need me to help them with anything. So they know that. And we set the bar high, and then those people I was talking about, they like that. They actually like it. They've loved the growth of the business. They're very proud of the business, We've probably changed a few CFOs, too many, but, when you've got a business with 8 stores and 100 stores along the way, you need more competency. And my problem is I am across the detail, so if I get a P&L before the board meeting, I can normally want to know that number doesn't look right to me, show me the detail, right? Mm-hmm. And then you might find it's not actually always as accurate as you'd like it to be. So I guess, it's a mixed bag, I guess. Like you said, the people have stayed with that and haven't liked it.
Before we get on to the future, or where you're at the moment and what it looks like, interesting, we mentioned before that you participated in purchasing some of your brother and sister's shares at that time, but later on you sold up to half your stake to a Chinese group. Why would you do that, and just the philosophy behind it?
Well, I had to buy my family out, basically, of the business. So it was an opportunity. I wasn't intending to do that, but got approached by the manufacturer.
And this is someone who had a long-term relationship with the group?
Yeah, correct. And they had just listed this company in China. They're quite a sophisticated company. They understand public company, understand what we were about, and they're very aggressive, ambitious company for growth. And look, at that time I thought we're probably in the future going to raise more capital, and at my shareholding that would be a lot more I'd have to put in. So I was more comfortable selling down a bit, keeping still a meaningful amount of shares. Also gave me the opportunity to divest a bit into other things for the family, to buy properties and invest in other areas, which is, because you never know, retail business can be worth nothing tomorrow. It's really easy, correct? So my view is like I need a bit of divestment for my family. Looking back, that was a mistake, really, if you look at it. I mean,
in terms of the share price?
And in the funds I received, I would have got that more and just continuing on the dividends. But at the time, that was just a decision I made, again, because of my conservative nature. And,
it sounds like the business has probably done better over that period than what you would have expected.
Yeah, because businesses are always stressful to run, particularly retail businesses, and when you've got a solid backing outside the business, not everything's in your business, you can make decisions, I think, better decisions because you're not that panicky or stressed about it, when all your wealth is just in a retail business. If you just the psychology.
Yeah, I suppose on our side of the fence, when you manage your own money, that's easier than managing other people's money. But you think maybe the reverse, that you might be a bit too conservative if it's your own money. Or all of your money on the line.
I'd be more stressed, and then if you're too stressed, you're going to make wrong decisions.
Yeah, no, that's a good point. Has it changed the way you manage the business since they've come in as the shareholder, shareholder?
No, well, they've left. They're no longer a major shareholder. So, no, I don't think so. Look, the shareholding I have, it's very meaningful, but putting that aside, the business has got my name on it, Nick Scali, the name's there, and my children in the business. So I think the alignment's good for shareholders. I think it works.
So today, or at the last reporting period, you had 107 stores, but you obviously bought Plush.
Yes.
In 2021, which was a big move.
Yes.
It was over $100 million that you purchased it for, but it gave you scale, and you've been turning that around. So today, 107. What ANZ? Before we go further afield, ANZ, what do you see the vision for the business now?
Yeah, look, there's growth. There's not as much growth that was, 10, 15 years ago for Nick Scali. Plush has got a fair way to go. So there's that rollout. But again, it's very difficult in furniture to open lots of stores in a year because where you want to open, there may not be any opportunity there or availability. So you have to wait for that opportunity. So we've got that growth there for the business, and yes, then we've got to look at other avenues of growth.
The Nick Scali Plush combination.
Yes.
What can the footprint be in that ANZ?
Look,
area?
Plush has got another 50 stores, so that would take Plush to 90 stores. I think Nick Scali, we said 85 stores. That's
a fair way to go.
Yeah,
to over 170.
It is, but it'll take. It can't be done in 2 years. It'll take some time again. So I guess being where we are now, we're also looking at what other potential avenues of growth, because we've got that growth and that's steady as you go. Well, which I don't like accelerating growth and doing bad lease deals, for example, because I think that comes back to hurt you later.
Yeah, it's got to be very measured, which has been the case all the way along.
Yeah.
You haven't been shy, or you haven't floated the idea that United Kingdom is a place that you think the Nick Scali retail concept or something similar could work. That's a big leap. That's the other side of the world.
Yeah.
And it's a big market and no doubt competitive. But you've hinted that would be a good place to go, and you've done a lot of work trying to work that out.
Yes.
Can you elaborate a bit on that and what you're thinking and why it might be a good market for you?
Well, in my travels to fairs and factories, I've met so many of the English retailers, furniture retailers, and their business is so similar to ours, and even the product, we buy sometimes there's exactly the same product. So it's a very, very similar market. There's no language barrier. The law is very similar. Everything's so similar. I think that's why I've liked the idea of expanding into the UK. It's a bit like New Zealand. I know it's closer, but it's similar, right? It's like another extension of Australia almost. So, and I see the way they do it, and I think there's an opportunity for us there. Furniture retailers there, very similar stories where the founders, started in the 60s, are gone, and some are public companies run by non-furniture people. So, I think there's opportunity there. That
you think you can do it better than some of them?
Well, yeah, otherwise I wouldn't do it, yeah.
So I can't imagine you starting greenfields.
No, it's too long.
It'll be an acquisition?
I think, yes, because it'll take too long.
And is the business, given you did Plush, I think it's 2 years ago now.
Yeah, and almost 2 years, yeah.
Yeah, and it seems like it's gone very well in terms of where it was at and where it's at today, and how it's generated quite a bit of profit, even though you don't disclose too much.
Yes.
Yeah, it's all part of one business, but it seems that way when you analyse it. Are you ready for a UK expansion yet? Or is this something you want to chew on for a long time, make sure you get it right?
I think if the right opportunity came, now's the right time, I think. And it's a tough market there at the moment, but that's why there might be an opportunity, because it is tough,
With the cost of living crisis, inflation being high.
Yeah, I mean, it's still a big population there. And look, I look at their revenue, the retailers, that the revenue is pretty good. Still pretty good, so I think there's opportunity the way they do their distribution. I think the way they buy. That's how I see it. So I think it's not that bad as it sounds. Yes, it's not like it was, and nor is here, right? It's tougher here now than it was during COVID. So I think a good business will do well even in a tough market.
Could you use the same suppliers? Is that one of the leverage benefits you've got?
For sure.
So they'd be encouraging you to...
Oh, yeah, they would love that. And it'd be good for our business here too. And the UK, an average furniture store does almost double the turnover of Australia. It's just because of the density of population. So, and there are actually, I think it's less fragmented than even Australia. And so, if you get... There are companies there with 40% market share in sofas. That's massive, So, yeah.
So we watch in anticipation. Yeah. Just before we finish up, just Future for Australia? You mentioned there it's a bit tougher now post-COVID. We know COVID was an unusual time.
Yes, correct.
And people did spend a lot of money on their homes because we spend a lot of time in our homes. We're out of that now fully. We're not even cycling the numbers anymore. Are you quite optimistic about Australia and the...
Yeah, I think so. I think, I think one of the benefits has for the consumers that their wages have been increasing, I think more than what you read. I think it's I can see that in our business. You've had to give people some hefty pay increases to keep them because they've got other opportunities, and and cost of living is going up. So low unemployment, which is almost too low because it's so hard to get people. So they seem to have the money. The interest rate rises. Yes, it's probably hurt a small group of people, but I think on the whole, people are okay, pretty cashed up. So they just, they stopped spending when the interest rates continue to increase, and now they're starting to stabilise. I think it'll be okay.
Be okay. And as you always say, if I can get them in the store, we'll make a sale.
Yeah, correct. Exactly. Well,
so we'll get some more decent ads, I suppose.
Yes, correct.
The TV ads might ramp up.
Yeah.
And what about you? As you mentioned earlier, 60 now, got your kids in the business, so the Nick Scali name will live on.
Yes.
It's still a family business. How long do you see? You're still passionate?
Yes.
Still healthy?
Yeah.
Jerry, I think, is in his mid-80s and he still turns up every day.
Yeah.
Rupert got to 92.
Yeah, that's right.
Before he pulled up stumps the other day.
Harry Triggerboff's 90, I think. Yeah, it's still going to work every day. Yeah, look, if you love what you're doing, you'll keep doing it. And I do like it. I really enjoy it. It's challenging. Retail's challenging because the environment's changing all the time. But I like it. So, I'm not going to retire. Well, and I think my wife doesn't want me to retire either.
That's always...
She knows that I wouldn't retire. If I retired fully from business, I'd be doing something else to do with business, where to be proper debt. So why not just stick to what you can do,
And succession, do you think about it?
Yeah.
Because you've been through it with your dad.
Yes, correct. Yeah. I think about it, yeah.
And what do you think about that premise that the best person should run the business in a family business, that kind of gets narrowed? It's not necessarily the worst person, but it's, there's a short list of people available if you continue to run it as a family business.
Yeah,
do you think about that much?
I do. And I think, look, I think if it was tomorrow, my daughter or son wouldn't be ready to run this business for sure. If it's in the future, maybe they will, That's how I think that's a good thing because you bring a CEO from outside, you don't know whether he's going to succeed or not. But, to be honest, particularly in our size business, not a massive business. It's a really hands-on retail business, and they're hard to find really good retail CEOs.
Well, typically the best businesses promote from within.
Yes. Correct.
Because the culture's already right.
Yes.
It's just handing that baton over.
You're right.
Keep the same kind of movement going.
Yeah, correct.
So it sounds like you feel that way as well.
Yes. Even from our store managers to regional managers, the head of retail, the best promotions from within, because you're right.
And so let's say you're 75, you're retired, you'll go sailing? Is that the...
Probably. Or might still be working, who knows, yeah. I still sail whilst I'm working,
So you can cover both.
Yeah.
And property, that's got you intrigued again, despite the early 90s. That's the only time you make the press, when you put your results out and when there's a property purchase.
Yeah, correct, yeah. But I think in respect of the furniture business, it's smart to own some of your retail property, particularly in those areas that, are susceptible to escalation of values. And, I think over time in the metro cities like Sydney, Brisbane, Melbourne, particularly those certain furniture stores will get smaller if they don't own the properties, because the rents will keep escalating to the point you'll have smaller furniture stores because that's all you can pay, as happened in Asia, a lot of areas. even the UK to a degree. So that's why I say like Harvey Norman has a huge advantage because he owns a lot of those properties. He doesn't have that risk, whereas other furniture retailers will have that risk. So owning properties in the right location is really important for the business, for the long-term, sustainability of the business.
Well, it's a great place to finish up on. So I'm going to say well done. Great Australian business.
Thanks.
Great career.
Thank you very much.
And it sounds like the business is going to keep sailing, but you're not going to go full-time. So.
No, that's right.
So keep on keeping on and well done.
Thanks.
Thank you.
Thanks.